Hello and welcome to the Bulletin with UBS on Monocle Radio. Each week, the sharpest minds and freshest thinkers in finance take you beyond the numbers and hype, right to the heart of the big issues of the day. This week, we're joined by two of UBS's best and brightest to consider what's next for Germany a couple of weeks after the general election. With the political direction of travel more clear, and with Chancellor-elect Friedrich Merz having already outlined plans for a major boost in defence and infrastructure spending, what will this mean for investor confidence both domestically and across the Eurozone? Here to answer that and a host of other questions across fiscal stability, trade and more are Maximilian Kunkel, strategist in UBS Switzerland, and Sam Adams, economist for UBS in London. It's a pleasure to welcome them both back to the programme. Max and Sam, lovely to have you both with us again on the programme, and great to have your collective insights to make sense of what might come next. Germany post-election, so many different aspects and facets. Maybe I'll start and I'll come to you, Sam Adams, just first of all. How different is your understanding of the likely next steps where we're talking now, a little bit after the sort of dust has settled, if you like, than from right around election time? What do we kind of know or suspect now that perhaps we didn't know even on the sort of the morning after the election itself?
Well, thank you, Tom, and thank you for having me. And as you already hint, our understanding of German politics and the economic outlook has really fundamentally changed. I think immediately after the election, it looked like a positive but slightly difficult outcome in terms of building coalitions, getting constitutional reform through parliament in order to get the economy going through fiscal easing. Now, this week, we had this huge package announced by the likely new coalition between the Union and the SPD on fiscal spending, on defense spending, to an order of magnitude that really exceeded expectations of ourselves, but also market participants, other investors we've been speaking to. So there's still a lot of uncertainty, and we kind of need to see how the situation evolves, but first and foremost, a positive signal right out of the gate.
Yeah, absolutely. Let me just jump over to you, Max. In terms of market reactions then, similar question, similar timeframes from the immediate aftermath of the election to where we are now, and with some of the developments that Sam's just mentioned there, what's that done to markets, I guess, both within and without?
It's given them a boost. And we've also continued to see a broadening when it comes to the performance of German equity. So, Tom, to just put this into perspective, in the 3 months leading up to the elections, the German equity market did well, but it was actually quite a narrow rally that we had seen. So if you take the MSCI Germany, for example, which is 56 stocks, 85% of the German stock universe, in the 3 months leading up to the elections, 61% of the performance for that index came from 5 companies. And what you've had since, and we think there's a fair chance that this is likely going to continue, is that due to a more pro-growth, reform-oriented new government, as well as continued cutting from the ECB, you are starting to see a broadening out of this. And in particular, one area that we've been favoring for some time at a broader European level, small and mid-cap stocks, have really been starting to outperform. And we think this could well continue in this environment.
Yeah, that's really interesting. And what about the question, I suppose, of the impact on sort of investor confidence more broadly, whether that's, again, within Germany, the whole Eurozone, indeed? Is it too soon for me to ask, and Sam, I'll come back to you, what specific, policy shifts should markets be expecting then, whether that's in terms of, fiscal discipline, stimulus and the rest? Too soon to tell, or can we make an educated guess?
I mean, as you say, it's still a bit early. I think the primary focus for the next couple of weeks will really be on the fiscal package. I mean, of course, we had the first announcement last week, and there it's really the question to what extent and in what form can this get over the line. And this will be very important in shaping how investors think about the growth outlook. And this could be a huge boost to the German economy, but also the European economy more broadly. And this would, of course, boost confidence of financial investors, but also corporates, which is important for stimulating investment. It could stimulate consumption among households. So this will be the first factor. And I think beyond that, it's still a little bit early to tell. I mean, the main parties are still in coalition negotiations. So those have not concluded yet. There are some areas where we can kind of expect them to find some sort of agreement, be it in bringing down energy prices. Deregulation is a topic that all parties have been consistently talking about during the election campaign. So you would expect something to come from there, and which would help cement this favorable growth outlook. But again, it will take a bit of time for this to really shape up.
And how important, just in terms of personnel, obviously we got a pretty good sense of the direction of travel in terms of, the next chancellor and so forth. And it's been interesting listening to what Friedrich Merz has had to say. Is that important? Is it more about the substance of actually what whoever is doing the job, it's the substance of what they try and do rather than the personality? It's been quite a complex process, and we know coalitions are always fraught with different tensions. Do the political characteristics here, Sam, matter, or do we need to focus more on the fundamentals?
I mean, the two go together. It does matter, of course, who is at the helm of the government, what is their ability to build those coalitions. It's worth bearing in mind German politics is very consensus-driven. So you need to have somebody at the top who is good at forming those political coalitions between the federal level and the state level across different political parties in order to bring a strong, growth-friendly agenda over the line. And then, of course, also thinking about the European level, you want to have somebody at the helm who can comfortably engage with other European leaders on the transatlantic level, somebody who can represent Germany very well. So this will matter to the extent that it matters the macro outlook, of course. And I think here it's still early to tell kind of how this will shape up. I think people are cautiously hopeful, but again, we will have to wait how this shapes up.
Across Europe, we have talked before on this programme and others about the rise of populist parties, sort of anti-establishment sentiments broadly. With that as the backdrop, and with what we saw obviously at the ballot boxes in Germany, what are the kind of risks post the election, do you think, to German fiscal stability? We think about adhering to EU budgetary rules, for example. Again, is it unhelpful to kind of draw a line between these different factors? Sam Adams, to you first of all.
Yeah, well, of course, the first kind of headline-grabbing outcome of this whole announcement has been, what does it mean for Germany's debt trajectory? Here we tend to think, Germany is actually a very comfortable level of debt absorption capacity. So, we don't think, for example, Germany's credit rating would be under threat, and this should stay at a high level because Germany's debt to GDP ratio is simply so much lower compared to peers, and it has run a very tight ship, so to say, over the last decade, at least. So we are not that concerned from that perspective. I think one risk we're thinking about here is what does it mean for other European countries and their incentive to engage in more fiscal stimulus? Because Germany has traditionally been a strong proponent of having very tight controls on government spending at the European level. Now, of course, this position will become more difficult to argue if Germany really starts ramping up its deficit. So we will have to watch how other countries react to that, which might not be in the same comfortable position as Germany when it comes to government finances. So again, we wouldn't expect kind of any negative outcome here, but it's a situation worth monitoring.
One important thing, because you talked about sort of the rise of the more extreme parties here. Remember that one of the thoughts from the centrist party, especially the conservative centrist party, was, well, yeah, we do have elections coming again, latest by 2029. And if we want to make sure that the right wing in particular in Germany is not going to continue in the same fashion that it has done in gaining support from voters, we need to be able to create an environment where people are not really looking for an alternative. And that can only be done by creating a more growth-friendly, reform-oriented government. And I think this is something we just have to bear in mind. The CDU-CSU in particular is acutely aware of the developments that we are seeing here. And they know they have to do something in order to ensure that the trajectory in terms of voters' preferences isn't continuing in the way it has done. And in order to do so, they have to take care of the one thing that voters cared about the most when they went into the election, and that's the economy. And I think this is actually something that is positive for markets.
Let's just zoom out a little bit. And again, I'll put the question out there and you can both weigh in as you see fit. What about the outcome of this whole electoral season in Germany? How will it shape the country's approach to its own economic relations with other trading partners? Now, whether we're looking to the US with all the attendant complications of that at the moment, China, Russia, I suppose. And if we think about things that are very much of the moment, trade tariffs, sanctions, financial, regulatory environment. What do you think what we have seen and will see in the weeks and months ahead will tell us about how Germany tackles those relationships? Sam, I'll put that to you first.
Sure. I mean, when it comes to trade, it's worth bearing in mind that trade policy is first and foremost handled at the European level, so EU level. Germany, of course, as the largest European economy, has some sway over these policies, but this is not primarily the responsibility of the new chancellor or the new government. So what I would note is that Merz, kind of initially in the election campaign, he positioned himself as somebody who wants to maintain good relationships with the US, who wants to de-escalate on the trade front. Now, of course, over the last weeks, we have seen trade tensions rise and protectionist moves come online, not only against the EU, but also against American trading partners more broadly. And I think his thinking in this regard also seems to have changed with the situation, and he seems to be much more of the view that the EU needs to confront the US at a level, like from a position of strength, so not be afraid to retaliate if this is necessary, which is kind of where EU thinking was in general anyway, is my sense. So I don't necessarily think that the change in government here will have a big influence over the direction of trade policy from the EU here.
Yeah, I think the important part that Sam just mentioned, and we are starting to see some signs of this, is that in order to be a partner at a negotiating table that is taken very seriously, you need to be able to offer something, and you need to be able to show strength. And this is the primary focus at the beginning of the new government now. You're trying to become more powerful. You try and regain strength. And this is, I think, very important, again, for the domestic story here that we're seeing playing out at the economic level, at least in the initial phase of the new government.
Well, you mentioned strength. Let's talk about quickly, and Sam, I'll come back to you, strong industrial base in Germany. In that context, what do you think the election results might mean, whether that's, I don't know, labour market policy or wage growth terms, or if we just look at German competitiveness in global supply chains, for example? It may be a little too soon to ask, but I'll ask you anyway. What do you think the direction of travel might be?
Yeah, I think the election outcome is positive for the industrial outlook. I think anecdotally, one factor that companies have been complaining about is high energy prices, which are significantly higher than, say, in the US or in China. And there's some scope for those to come down as a result of a future economic policy. Again, we need to see, but I think we can speculate at this stage that this is something the government will be thinking about. And in general, bringing down regulatory barriers, making it easier to do business, I think those will also help. On the other hand, I mean, it's also worth acknowledging industrial output in Germany has been trending lower for multiple years now. I don't think we're talking about purely cyclical weakness at this point. I think there are structural headwinds. And you mentioned labor market policy. So demographics is one issue that is weighing on German industry, but also in general, intensifying competition, say, from Chinese producers in increasingly high value areas as well, in which Germany traditionally was quite good in, has also been a negative factor for industry. So I would describe the situation as positive from a cyclical perspective, thinking about the election results, but then again, we need to limit our expectations a little bit given those structural headwinds.
One very quick last remark, Max. You'll know from our previous conversations, often like to just get a bit of a sense about, look, what does all of this mean from an investor point of view? Any kind of quick takeaways from these last couple of weeks post-election in terms of how this should shape, investor mindsets and maybe investor decision-making going forward?
Yeah, absolutely. I mean, we went into the year, you might remember, Tom, with everybody only wanting to speak about the United States and everybody only wanting to invest in the United States. And our view has been and continues to be that, yeah, certainly one should be positive with regards to many areas of the US stock market and the broader US economy, and should not underestimate the potential durability of the strength there. But on the other hand, one should not only focus on the United States, because there are potential upside surprises coming out of both Europe and Asia. And in Europe, one of the areas that we had said could potentially surprise to the upside would be the election outcome with a more pro-growth, reform-oriented government coming out. And this is effectively what we have right now. And I think that in turn is important for investors that might still have over allocations regionally in other areas. Equally, within Europe, we continue to like German equities, given a key beneficiary that they are from higher defense spending, a bottoming in the manufacturing cycle, and what Sam mentioned earlier on also potentially lower energy prices. And as I mentioned before, I think this whole pro-growth, more domestically oriented economic recovery that you might get from here is benefiting the small and mid-cap space in particular, which continues to be trading at both relative and absolute attractive valuations, is more domestically oriented and a key beneficiary of ECB rate cuts.
Max Kunkel, and before that, Sam Adams. And that brings us to the end of this edition of the programme here on Monocle Radio. Listen again and explore more at monocle.com. And you can discover more and find out how UBS can help you by visiting ubs.com. I'm Tom Edwards. Thanks for listening.